You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the CBOE over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means we are back once again with the Advisor's Option. Yes, our monthly sojourn into all things going on at the intersection of the bustling world of financial advisors and asset managers, as well as the equally bustling, if not explosive, world of options and derivatives. In that Venn diagram where they overlap is where this show lives. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been mainlining out there. Remember, of course, if you want to go above and beyond, and we don't talk about it a lot on this show, but there are a lot of professionals lurking in our pro as well. We don't call it pro for nothing at the end of the day. So if you're one of the many advisors or asset managers out there, maybe you have some more questions about how these things work. You want to check out some additional content. The Pro is a great resource for you. Head on over to the Pro, theoptionsinsider.com/pro to learn more. You'll get Pro Q&As every week, as well as, of course, Options Oddities, which is just great idea generation, as well as a heck of a good time, if I do say so myself. Giveaways, live streams, all sorts of fun. Theoptionsinsider.com/pro is the place to go as we go around the horn and see who's joining us on the old Advisor's Option program this month. I am pleased to welcome back from his global travels. He heard the Panama Canal was in flux. He wanted to go check it out for himself. None other than our good buddy, Mr. Matt Amberson, over there at ORATS. Mr. Matt, welcome back to the Advisor's Option, sir. How were your global travels, sir?
Oh, I love Panama. I was getting some shit from people. Are you down there for on a mission? I knew you were connected, but yeah, I had a good time down there. It's beautiful.
Interesting timing to visit the Panama Canal, I will say that.
No, Rubio was there when I was there, so like they thought I was his bodyguard. I have been lifting, Mark, so they thought I was connected. But yeah, and then next month we're going to Spain. I'm looking out at snow on the ground here, and I need to go warm up my tootsies, Mark.
Dang, I wish I had your travel schedule. I'm just here slaving away on a mic. You're just gallivanting around the globe out here, listeners.
Are we going to see each other down at OIC in Miami?
Yeah. Oh, yeah. I'm there every year. Are you going to OIC this year?
Yeah, I'm on stage with Henry.
Watch out for that Flowmaster. He'll throw you some curveballs.
I know.
Speaking of curveballs, or I should say excitement, our chat is pretty fired up. Mr. Matt, we got Mr. Nichols in our chat saying, advisors option time. Let's use the family-friendly version. Let's freaking go, Matt. And he also says, welcome back, Matt, from your travel. So our chat is fired up. I hope you're fired up, listeners, because it is time for the P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right. Everybody, welcome to the P&L statement, the portion of the show that was born of the pandemic, where really we spent a lot of time at the top of every show saying, man, what the heck just happened? So we continue that tradition now. And you know what? Things are by no means quieter than they were back in those mad, mad days, the dark days of 2020 and 2021. We warned you towards the end of last year. So watch out for the beginning of the year because it kind of comes in like a lion. And that's pretty much what we've seen in the interim since our last shows here. The year kicking off spicy, kicking off hot. Middle of January, of course, we had that big sell-off in the broad markets, driven by many things, fears of inflation, and of course, the fear that maybe the AI bubble was about to burst with DeepSeek. Then we had an equally aggressive rally back up north of the 6K level, and the S&P hit new record levels north of 6,100. And now as we are recording this, listeners, it seems like we are coming back down the other side of the bell curve in the broad markets. The S&P back below 6,000 after selling off for the better part of this week, selling off towards the end of last week as well. It seems like we've kicked off every week for the last few weeks with some sort of big gut punch to the market and all sorts of issues going on out there. Vol also continuing to climb after selling off earlier in the year. We got north of the 20 handle again out there in VIX cash land. In fact, we got to 21 and a third, actually 21 and a half this morning out there in VIX cash before coming back down to about a 19 and a half or so right now as we're kicking off the show. Either way, still pretty elevated from where we were the last time we cracked a mic around a 15 handle out here in VIX land. So a lot going on in an overall market perspective. We'll get to all the earnings fun in a second. Certainly a lot going on out there. In fact, we still have the big dog. We have Nvidia to come later this week. So all eyes are still clearly focused out there. But Mr. Matt, a lot's gone on since the last time you and I chatted here on the Advisors Option, and since the last time you got off your boat from Panama. What's been catching your eye in the broad market and indeed on the volatility side since the last time we chatted, sir?
Yeah, it's been something out there. We have a one-day historical volatility number that's an improved Parkinson for all the HV geeks out there, and it rang the bell yesterday. It was up at 23. We had one nearer then in December 19th, but it was a volatile actual day. I'm excited to show you a new term structure of short-term SPX, and that's really showing some big additional volatility days out there. We got some macro events coming up, and when we're treating macro events like earnings, so I'm teasing that right now. So that's coming up, but yeah. We had a very volatile day, up big in the morning, down big, and then up big again. So that it might not look like from a close standpoint that the market moved too much. But if you have good intraday measurements like we have, you could pick those up. As a matter of fact, one of the tools that we have is testing our historical information on the ability to predict back-tested returns. And one of my favorite tools is the ORATS intraday historical volatility versus traditional close-to-close volatility ratio. And that has a good method or a good record of predicting when to get in and when to get out of risk on or risk off type positions. So that's been real interesting, and it's kind of a risk off time right now with the intraday volatility very high, and the market's sensing the upcoming economic news, and also Nvidia reports on the 26th, the night of the 26th, so tomorrow night. So there's a lot coming, and the markets are sensing that, Mark.
A lot coming indeed, listeners. Matt, you are one of our well-known, let's say, more bearish voices here on the network. A good counterpoint, a good juxtaposition to the perma bull that is Uncle Mike and the rest of the crew out there. We got Dr. Vix. He's been aggressively short this market for a while as well. So you are far from alone. But that said, it's an interesting time, folks. You know, last time we were gathering here together, everyone was wringing their hands over DeepSeek. They thought this was going to be the beginning of the end of the bull run. Of course, we saw an aggressive run after that, now starting to come back the other side down this way. So the inevitable question a lot of people have right now, a lot of people are debating right now, is this the one? Does this have legs, or is this just another pause, Mr. Matt, before the bulls kick in again and we're back north of 6,100 in a couple of sessions?
Yeah, I mean, my concern on the market is just enough to get me to protect myself, which is good. But I do have, as we talked a few times over the years, in my permanent portfolio, I still have a good 25% in there. I just have it protected in other ways. So it's hard to look at the market and not think it's overvalued. Buffett recently has gone even more into cash and isn't saying why. But this market has confounded the bears, and so you just have to have these positions on that we've talked about for quite a bit of time that allow you to remain invested but still have some downside protection that doesn't cost too much. So that's difficult to do. That's why I like the out of the money, longer dated, long put calendars, way out of the money. They have that decay a little bit in their favor since you're short the front, and it doesn't cost nearly as much as a straight put. So you could remain with protection when it's quite expensive. I don't see it. It doesn't look like it's breaking down my volatility, even though volatility has shown some signs of coming back. It's not anything blinking red right now. So, we're still on the non-aggressive protection. I'll go very aggressive into protection in times of duress. With the rule of thumb that I learned from backtesting, where they don't get the vol high enough and they don't get it low enough. What that means is, like in 2017, the implied volatility went way down, but it was still profitable because the realized volatility was so low. Same with some volatile times. When it starts getting really volatile, doesn't mean it's a sell signal for volatility. Often means the opposite in backtesting. So that's how I'm playing it, Mark, and that's what I'm seeing in the market.
Well, it's funny we're talking about bearish sentiment because we had a fun flash poll we put to our audience yesterday during the option block. It just expired a few minutes ago as we were talking, Mr. Matt, and it's kind of right up your alley. I want to get your thoughts on it. We asked our audience yesterday. We saw a big block of the SPY 490 puts. Yes, SPY right now at about 596. So 490, a decent ways out of the money. These were the March expiring on the 25th. So pretty much end of March, 490 puts traded in a huge block, 150,000 times for 28 cents yesterday morning. We asked our audience at that price, that expiration, are you a buyer? Are you a sold to you? Or are you prefer to play somewhere else, let's say vol or crypto? And Matt, 46.4% of our audience said sold to you. 35.7% said they wanted to buy those puts. 14.3% said they're going to stick with the vol space. And 3.6% said they're going to hang out in crypto and say, forget that. And that's the case. Hopefully you're buying some crypto puts right now. That stuff's falling out of bed, which is fascinating. Check out our deep dive into that on the crypto rundown yesterday if you missed it. But Mr. Matt, our audience wants to sell those puts for 28 cents. The March expiring on the 25th, 490 puts. Are you a seller as well, sir?
Well, I think that it went up as a butterfly. That was the 440, 490, 540. The 490s was the middle. So that's at least how I'm reading it from the ORATS time and sales, are another new tool that we have. The butterfly, the most you can make on that butterfly is $50, and it went up for $1. So it's 1 to 50. So I don't mind those odds. 540. I kind of like that, actually. I would buy that fly for $1.
I do like it straight up as a fly better than the puts by themselves. You're right. But that's the fun of having to digest flow on the fly as you're doing the show, right? A fly, you like it better as a fly, listeners? I'm intrigued out here. Our listeners are having a ball. We got Unlimited in the chat saying this is one of the more underrated shows. It only happens once a month, but lots of good information drops. Yeah, we endeavor to please here. I agree. Advisor's Option, one of the fun hidden gems. In fact, that's exactly what Nichols said. AO rocks, the secret gem of the network. He also wants a Matt versus Uncle Mike debate. Uncle Mike's dance cards getting pretty full right now, Mr. Nichols. Carly wants to debate him. Russell just called him out for the 80s wrestling trivia. His debate dance card is getting full. I'm not sure if he has time in his schedule for a bull versus, let's say, cautious, pessimistic bear debate, but maybe we'll see. And he says the winner should debate Carly. I don't know. We gotta get through a bunch of debates before we get there. But Mr. Matt, the audience clearly enjoying a little bit of AO, sir. What do you think?
Yeah, I mean, it's a great show, if I might say so myself. And we've only begun to fight, Mark. There's a bunch coming up that are going to blow their socks off. So let's go.
All right, let's go right on into the earnings volatility report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everybody, welcome to the Earnings Volatility Report. One of the questions we've been asking for a while, kind of like with the options volume, is can this speeding train, this juggernaut that is earnings vol, can that continue to blow the doors off month after month and cycle after cycle? After the last banger earnings season, we got our long-term average up to 117%. Now, remember, that isn't for the entire time that we've been crunching this data. That data actually goes back much farther, over 5 years, as I recall. That might be fun to check out what the full entire time average is. This is just a rolling average of the last 3 years. So obviously a season will drop off after this season. But still, that average in and of itself has been bid up to 117%, which, if you remember when we were crunching this data back in the dark days of 2020 and 2021, it is just a different world completely. We were talking sub 80% back then. Nobody cared at all about earnings volatility. No matter what the company said, it didn't matter. Didn't budge the needle. Vol went to die. These days, completely polar opposite side of the spectrum. Pretty much every week this cycle, with the exception of week 4, has been just pinning the needle past 100%. Week 4 was the lone laggard. That was 97%. But every other week, this current week, 155%. A couple of weeks ago, 114. Week 2, 136%. Week 1, a banger, 145%. So outperformance pretty much across the board. That is the name of the game. Mr. Matt, we've been kind of debating for a while. It seemed like the worm had to turn eventually. We've been waiting each cycle patiently for that to happen, and yet that has not come to pass. What is catching your eye out there on the earnings vol front as we're in the midst of yet another explosive cycle, sir?
Well, I think what it tells you, Mark, is that it's a stock picker's market. When volatility is low, the benefits of diversification are out there, which is to say that the SPY versus the weighted components is relatively low, which is what you want in a healthy market. You want to get the benefits of diversification. And when you have that, then people can concentrate on the individual reports coming out. Now, when we had COVID, when we had market sell-offs and a bunch of macro information out there, we had straddles in earnings times going to die. But in these times, when people are focusing on it, they really will send the stock way up if there's the good news, and down when there's bad news. And they have so much AI reading all the information and being able to react quickly, and whose AI is faster. And there's just a lot of movement now. And so I think what we're seeing is a few things. It's one, when the volatility of the market, which it has been, this earnings season started the 17th of January. And it's been relatively benign from a volatility standpoint during most of the earnings weeks. And then when that happens, you tend to see more returns to straddle owners at that time. So, and that also tells me it's a stock pickers market. It also tells me it's a healthy market. And so, all those things can be seen in the data of just the earnings season. So that's been real interesting. And from a single standpoint, I mean, Nvidia is coming up, and there's some really interesting things going on in that stock, Mark.
Well, let's get to it then as well, because that's obviously the big dog. I don't have the report for Nvidia in front of me, so I'll let you inform the listeners here, Matt. But yeah, there's been the joke for a while, kind of a running joke, really only a half joke at this point, that it's Nvidia's market. We're all just living in it. And yet everyone's waiting, pins and needles. We saw Nvidia take a good drubbing post the whole DeepSeek revelation, call it what you will out there. Has since made a nice rebound, over the past month. It got as low as looks like about 116. And then obviously we got back up to around the 140 level that, of course, it was at right before. Actually, it was at 147 before all the DeepSeek crushed it down to about 116. So it has recovered. It did recover. And now, of course, given some of that back down to about 129. So below those lofty highs, but also still above the lows, the recent lows of DeepSeek. Not quite as low as it got last September. It got down to about 102, almost broke the par strike out there. So not quite that low last September, but still intriguing times. Mr. Matt, what are you keeping an eye on out here in the big dog known as Nvidia these days?
Yeah, first of all, it's incredible how much it trades. We have a graphic that sizes these earnings by average volume, and Nvidia just dwarfs everyone else. So that's one thing. Another thing is the option market is implying a move of 9.8%. That is the second highest if you go back 13 quarters. So there was a 10, but mostly the average is 8.2, and we're 9.8, so that's really high. The actual moves, the average is 7.6, so it's up there. So they're expecting some fireworks. I'm reading here in The Economist, Nvidia is fighting off two threats, DeepSeek and Donald Trump. So I think people are wondering what they're going to say about both, and that's going to drive the stock one way or the other. But it's going to be interesting to watch tomorrow night, 24 and a half hours from now, Mark. We're gonna get some fireworks, I think.
Yeah, even if you're not a big earnings vol trader, maybe you're one of the advisors out there who loves a more passive approach. You love sitting on your index funds and your ETFs and everything else. Even still, you should be paying attention to the big dogs like Nvidia, because whither they go, that's where the market tends to go at the end of the day. As we tend to go right on into our next segment, it is time to get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzzed.
All right, everybody, welcome to The Buzz, the portion of the show where we break down some of the big trends and stories that are going on in the world of options and derivatives that maybe you, the busy financial advisor, haven't had a chance to keep up on because, go figure, you're answering your phone a lot these days. Your clients are probably calling up a lot or messaging you a lot because there's a lot going on in these markets. Probably some sleepless nights for your clients. That's job one. We're here to fill in the gaps for you in the world of options. Let's start with the big story we've been talking about for a few years now here on the show, which is can the tsunami continue? Of course, we talked about 2024 being a yet another record year for the options market, listeners, putting up just ridiculous numbers out there. When we're talking about what the options industry was doing back pre-pandemic, 2017, 2018, 2019, versus what we saw last year, you're talking multiples of that. You're seeing well over 1 billion contracts in a single month now. That was the realm of pipe dreams just a year or two ago. And now it's almost a frequent occurrence out there where you kind of have almost come to expect 1 billion contracts a month. In fact, that 1.1 billion threshold, it seems like it's kind of the bar out there right now, which of course, do the math, that gets you well north of 12 million contracts in a year, which would be yet another banger year out there, listeners. So 2024 was indeed a banger year. The question then becomes, can that continue? Can it possibly continue, or will the momentum eventually fade? If you'll recall that panel I did with the Flowmaster and JJ and everybody else back at the beginning of last year, one of the troubling signs we saw in the options market in 2023, which was also a banger year, was that the lion's share of the growth was coming from index options. And that was kind of the main motive force. Single name equity options had kind of dried up. They were pretty much flat year over year. You took out 1 or 2 days there and they actually would have been down on the year. So that was a bit of a disturbing sign. Maybe the retail folks that had come in with the meme stock craze and everything, maybe they had shifted to zero DTE. Maybe they had to stop playing altogether. But that was not the case last year. Zero DTE, the index options did well, ETF options did well, and thankfully, single name equity options did well as well, which is, of course, the bellwether for the retail trader at the end of the day. Now we have the January numbers. Pretty soon we'll have the February numbers as well. February flying by fast and furious so far this year. And was January a banger, listeners? The answer was yes. Again, getting back to that new threshold, that new floor, that new bar that we've set in the options industry of a little bit north of 1.1 billion contracts. That's exactly what we hit in January, 1.16 billion contracts. I mean, the whole industry was doing 4.5 billion contracts in a year. Not that long ago. Now we're doing 1.1 billion contracts in a month. Again, just shows how much things have changed out there. And once again, the lion's share of the growth, the engine of growth, listeners, was single name equity options. 27.6% increase from the January of the previous year. ETF options up 8.3%. Index options actually kind of the laggard. Index options only, I say only in air quotes, up 5.1%. Again, total volume up nearly 18%, 17.9%. One of the lone dark spots was the futures, and OCC mostly clears VIX futures. Futures down nearly 9%, 8.6%. So for whatever reason, January, even though we had that nice sell-off and rally, didn't really drive a lot of paper on the VIX futures front, which is kind of surprising. VIX futures is always kind of the question mark to me. What drives volume out there is always a bit of a head scratcher. Months where you think they would do well, they don't. And then months where you think it'd be kind of quiet, they blow the doors off. So VIX futures continue to do their own thing, kind of like small caps. But a fascinating month. Mr. Matt, what are your thoughts on the yet another record year for 2024 out there, Mr. Matt, as well? Total volume in 2024, listeners, almost 12.3 billion contracts, by the way. So just a banger year. And then B, the fact that momentum already off to a rollicking good start in January, sir.
Yeah, I mean, there aren't that many more traders. So this is all technology. There's so much more automation, APIs into brokers, easy to get into and trade and make markets. It's a lot of this technology and better markets. I think AI is probably helping out people coding faster. There's a lot going on, but to me, this is just people automating their trading a lot more and looking for new places where there are some edge. They started in index options. Obviously, the 0 DTE started May of 22, was it? And so that's starting to get maybe somewhat mature. And so now people are moving down into these single names to try to find some edge. But it's all technology, Mark. To me, we're doing great at ORATS. We're getting a lot of people in, about half using our tools, half using our data. But there's just a lot more interest, and I think a lot more automation, a lot more liquidity, and I think that's why we're seeing these numbers, Mark.
Speaking of numbers, we have some numbers in from our friends over there at Schwab. They're making that whole 24-hour trading debate, bringing it right back to the fore. We last debated this last year at the OIC conference when NYSE put out a survey of its members to see if they wanted things to go 24/7. At that time, we asked our audience, do you want options trading to go 24/7? Nearly 70% of you, 69.8% said no. Only 30.2% of you said yes. But fast forward to this past week, and now Schwab turning it up to 11 on the overnight trading front. They said they had a successful series of pilots last year to test what they call overnight session orders. And these are continuous orders that expire, I guess, at 8 p.m. the next morning. And now they have the results of that going 24 hours a day, 5 days a week out there. And they said it was a pretty impressive pilot for them. They say during that expanded pilot, it ran from November through January. And the most active stocks that they traded were probably some of the ones you could expect: Tesla, Nvidia, Palantir, MicroStrategy, and AMD. They said that what they saw was trading behavior that more or less mirrored what we typically see during standard market hours. Activity was most pronounced at the beginning and end of the overnight session, similar to the behavior we see during market open and close. And even the top names more or less match up with what we've seen in recent months in their various intraday activity indicators out here. So they now are rolling that out to all of their retail clients. So it does seem, Mr. Matt, like the train is moving on down the track on the road towards 24/5, and who knows, maybe eventually 24/7 options trading. Obviously, if the underlying is trading, it's only a matter of time before the actual options are trading as well. Now, there's various camps on this. If you listen to a lot of our content from OIC of last year, different stakeholders in the world of options have different thoughts on this. There are a lot of brokers outside of Schwab who don't want this. They don't want the expense and the hassle of staffing up and handling the overnight risk. Schwab obviously can leverage some economies of scale that other brokers can't. They are clearly using that to take advantage here and say, hey, we're going to push this. But Robinhood's been doing this for a while as well. We had Public on the network for a while. They're going to make some forays into that realm as well. So it does seem like the lion's share of the brokers realize that's where the inertia is in the world of trading, and they're heading that way. So the question becomes, Mr. Matt, where do you fall on the whole prospect of options trading 24/7? And then B, that is the subject of our question of the week right now, which is open to the audience as we speak. We gave them three choices: the heck yes, heck no, or go big or go home, Matt. We said, forget 24/5. I want 24/7. So A, what is your vote? And then B, which way do you think our audience is going?
Yeah, it's a tough one. I remember when we were trying to make it earlier in the morning, and the people in San Francisco, Doug Engman and such, said, "Hey, we have to get up at 6:30 already." But now it's going to be all night. I already don't get enough sleep, so it just feels like a flash crash is waiting to happen if you start doing this too much. I think automation has to get a little bit more advanced. I think that they should kind of ease into it, but definitely should go there eventually. The automation is going to make it much more doable. I don't quite think it's there yet, but it's getting there. So that's how I'm feeling about it, Mark.
Yeah, it's fascinating. Let's see what our audience has to say. Right now, this is still live. Listeners, you can get on over there at Options. It will be our question of the week. It will still be live when the Advisors Options hits the on-demand network later this week. And last year, like I said, Matt, our audience was overwhelmingly against it, nearly 70%. It started off that way as well. It seems like some more folks have come in since this went live yesterday, started to move things around a little bit. Heck no is still winning with 53.1%, but heck yes now, number 2, 37.5%. And then you add in the crazies, the hardcores, they want 24/7. They're almost 10%, 9.4%. So if you add those two together, as obviously they are both in the yes camp, then you're closer to 50-50. You're talking around 47 versus 53% out there. So kind of interesting. Get over there and make your voice heard if you want options to trade around the clock. Now, obviously, they won't just dive in 24/5 and 24/7. There'll be endless debates about what format that should take. I've heard suggestions of a limited pilot, maybe limiting it to a certain time of the year around earnings season, maybe limiting it to a handful of the most active names, your Nvidias, your Teslas of the world, that sort of thing. Only strikes around at the money to start. So there's a lot of different ways this could shape up. I don't think if you start seeing, let's say stocks go 24/7 tomorrow, I don't think you're going to be seeing just straight 24/7 options trading. It'll be a little bit more nuanced than that. But still, fascinating stuff out here, listeners. Speaking of fascinating, it's always fascinating when we delve into the tricks of the trade.
And now it's time for practical tips on how to implement options into your practice. It's time to learn the tricks of the trade.
All right, everybody, welcome to the tricks of the trade. And today's one's special. It's something Matt has been cooking up over there with the ORATS crew for a while. We were talking earlier about, broad volatility setups and what's impacting volatility. We're obviously a big driver of volatility right now are some of the, shall we say, macro events that are going on out there. The broad, big events that everyone is focused on. You can look at the obvious stuff like the Fed, but there's even more than that. Obviously, there's more economic numbers outside of the Fed. There are the endless geopolitical wild cards out there, some known, some unknown. There's big events like Nvidia earnings as well. That certainly qualifies as a macro event now these days, even though it is very much micro in terms of focusing on one individual name. So there's a lot going on. Matt, I know you've been crunching some of this data recently to try to figure out what really is going on from a macro perspective. And more importantly, for our audience, how does that impact the vol market and the implied vol levels, Matt? So what have you been finding out over there in your research, sir?
Yeah, so what we've endeavored to do is when you look at the SPX term structure, which is the at-the-money volatilities for each expiration, and we're concentrating in the first 16 expirations, it looks pretty uneven. It looks like there are bumps, and it looks like there are some, shall we say, consistent ups and downs to that. So the consistent ups and downs happen around weekends. So the first job is to smooth out the weekend. So calendar days don't work, especially when you get to the lower DTEs. So you can't have, let's just say, 5 days to expiration on Friday, and then 8 days to expiration on Monday, and plug those both into a Black-Scholes formula and expect to get anything very consistent with what the market's actually doing. So that's a calendar day right there. But business days would have you use 5 days for Friday and 6 days for Monday. But that doesn't work. That undershoots what the weekend effect is. So there's a weekend effect out there, and holiday day effect that we figured out that smooths that weekend. So that's the first step to do. And then once you've done that, you get a remarkably smoother term structure, but you still have some bumps in it. So in our blog, and we've posted it to Interactive Brokers as run with it, and NASDAQ ran with it. So it's going out. It's out there. Reddit and Reddit Options is posting it too. That this graph shows a big jump on the 27th and also on the 7th of March. On the 27th, as you mentioned, Mark, Nvidia's earnings is going to affect the 27th. So that, I think that is bumping it up. But we also have jobless claims, GDP, durable goods. So there's still some market moving macro events coming there as well. So we have an automated system that will go in and essentially smooth out, come up with a baseline volatility term structure. And then those bumps, we transpose those bumps into something that we identify separately, much like we do with earnings. We're looking at the macro event implied move of an earnings is now implied move of a macro event. So we much like we do with earnings, we take out that 1 day move and say, like for Nvidia, it was 9.8, and we know what it is by average. We could also do that now for macro events. So I think that's really exciting. For example, you have GDP, and we could go back and we see that the historical additional add for GDP is only 57%. For the Fed balance sheet release, it's 80%. So with all those together, it looks like the 56% that the market had in there is a reasonable amount. But there's also the next, there's a big bump on the 7th. And on the 7th, you get non-farm payrolls, you get average hourly earnings, you get unemployment rate, total rig count, and Bank of England's customer credit. Turns out that the customer credit usually garners something like 100% more additional volatility, and then so does the hourly earnings. So that the 7th looks reasonable. So you might look at that bump in the term structure of the SPX and say, well, I would sell March 7th and buy something else. Well, no, not compared to where historically that additional earning or additional volatility has been in the market on average. So we're pretty excited about this. We think it allows you to see what the baseline implied volatility is, and then isolate the volatility bumps on their own, make your own study of it, and then you could come up with a much better look at what's happening in the market, Mark.
Yeah, this is really fascinating stuff. Again, listeners, we kind of only have time to scratch the surface of this, but I encourage you to check it out. We'll tweet it out if you haven't seen it already. Matt has it up over there on the ORATS website as well, the ORATS blog. If you want to search for it, it's just called Significant Volatility Events for next week. But again, there's a lot of visuals out here. Check out the graph about additional volatility for upcoming macro events. And again, I encourage you, if you're intrigued by all these things we talk about here, not just the earnings vol, but obviously the more macro vol lens and how to view the vol space through this macro-oriented lens. And it is definitely some good reading. I'll make sure we tweet out a link to it again. So if you are following us, and by the way, what are you doing? If you're not following Matt on Twitter, @OptionRats, first off, it's a pretty catchy handle. You think he's an options trader who's as a side business, as an exterminator. I like it. But also, it has links to stuff like this. You can always find it at orats.com as well. Pretty fascinating stuff. And again, especially as we're going into this year, we're missing some of the obvious catalysts that were on the board last year, like the election and things like that. Those were obvious macro volatility events. This year is a little bit more fluid, a little bit more interesting. So you might need a little bit of help trying to figure out what's really going to move the needle from an implied vol perspective. So I encourage you to check that out. But you know what always moves the needle? It's your questions. Let's get to them now. Easy for me to say. Let's get to them now. A little bit of the old office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody, let's get down to business, see what you folks have on the brain. We already hit on our 24/7 debate out there right now. We also talked about the puts in SPY. You folks wanted to sell those out there. Got an interesting little question of the week out there right now as well. Kind of an ancillary one that popped up during our fascinating conversation with the folks over there at Amber Data, the crypto analytics side, which is just what the hell is going on from a crypto vol and asset. And of course, just seeing all the underlyings kind of get taken to the woodshed right now. Solana selling off over 100 handles. In fact, it's even lower. I think it hit 133 today, so it sold off another 15 handles since we were talking about it yesterday. Kind of a fun little question of the week going on out there right now as well, which is quite simply, if you had to buy and hold one crypto asset for the rest of 2025, which one are you choosing? We got Bitcoin, ETH, and Solana, so the big three, and then we added the infamous other, which some of you are choosing out there right now. We've had a lot of different chime-ins, including, I don't see him in the live right now, but I know Age was listening yesterday, and he chimed in on Twitter to say he chooses other. He thinks crypto is basically a slot machine. He'd be buying Doge for the high risk, high reward, which Greg, I think, was kind of down with on the show yesterday. Mr. Matt, I know you and I have chatted crypto in the past. This is a growing area of interest for a lot of financial advisors out there, just because the clients are demanding it these days. I know you're kind of, I won't say crypto agnostic. You got a little bit of holdings out there, but I think you've dialed back a little bit. That said, gun to your head for the rest of the year. You have to buy and hold it for the rest of the year, Mr. Matt. If you had to choose one of these, Bitcoin, ETH, or Solana, or do you go the other route? And then B, which way do you think our audience is going, sir?
Yeah, so this is a good question. So I like Bitcoin Cash. If you read Hijacking Bitcoin, which I suggest, it's an audiobook. But I would choose Monero. And if you go look at McAfee talking about cryptocurrencies, he's a big Monero fan, not with us anymore. But so that's where I would go with it, Mark.
Interesting. You would go for the other route. And right now, kind of surprising to me, Mr. Matt, because you kind of think Bitcoin is kind of gets all the heat, but all the cool kids like to pick something else. But right now, Matt, 65.2% of our audience choosing big dog, Bitcoin out there, which is kind of surprising to me. 15.2% going Solana, 12.1% for ETH, which has just been getting lit up this year. Not a good year so far for ETH. And then 7.6% for other. We've got Matt's vote for Monero. We've got people writing in for Doge. Get over there. It's kind of a fascinating debate out there right now. And certainly if you're looking for an asset class that's got some vol and some action and also a growing number of options, pun intended, that you could trade around it, including IBIT, including the BITOs. They're talking about some Solana ETFs coming online. So it's going to be a lot more optionality to come in that space in the coming year. Then you could certainly do worse than the crypto space. And get on over there. Give us your voice out there right now. Mr. Matt, we got a question coming here from BTD. Sounds like this is right up your alley. He says, has there ever been a result from a backtest that surprised you? Perhaps a strategy that you had previously written off only to be surprised at how effective it actually is. Mr. Matt, when you're not talking to us, you're out there crunching, I forgot what the number is, hundreds of millions of back tests. BTD wants to know, has there ever been a result that surprised you, maybe a strategy that you had written off that turned out to be better than you thought?
Yeah, it's what I was talking about before. It's changed my thinking about implied volatility, about option prices, and about strategies at certain times. It's when you're back testing in different environments, and we'll look at volatility in the top 80 percentile and the bottom 20 percentile, and what you see is that you would think that you'd want to be selling when it's above the 80 percentile, but it's the opposite. Those are actually good times to buy volatility, buy options. And conversely, when the volatility is under the 20th percentile, that's often a good selling time. So even though the premiums aren't there, what happens is the rule of thumb is like I mentioned before, the markets don't get vol high enough and they don't get vol low enough. And so that's the biggest surprise that I've seen in backtesting. And we've done, hundreds, as you mentioned. We have 181 million on our backtest finder right now, pre-run strategies. And I, obviously done another probably $500 million. That's just crazy. But yeah, that's the biggest surprise that I see, Mark.
Speaking of backtest, Mr. Matt, we have our chat debating right now. Looks like a weekly trade on Nvidia earnings, 135, 140. It looks like vertical out there. They're talking about prices. It sounds like it's around $1.50 for a weekly. That seems a little bit rich to me. But I'm not sure if I'm going to be out there paying $1.50 for a 1 week to go, not even less than a week to go, vertical that could easily be worthless if Nvidia screws the pooch. That said, I think they kind of agree. They like it for a little bit cheaper, around $1.20. I'm guessing, Mr. Matt, $1.50 for a $5 vertical with a few days to go. Not exactly your preferred MO for Nvidia, sir?
No, I mean, this is a tough one. But I'm more in the camp of the calendars. I look for a cheap vol to buy, and the front months to sell are pretty juicy right now. So you could do that, fairly far out. Even you could diagonal it. That's how I would probably play that mark.
Yeah, take advantage of that earnings juice, listeners, to sell it and then get something against it, and you can get it for a fairly decent vol level right now. If you're comfortable doing calendars and diagonals, I know for some folks out there, that's still a little bit of options 201 or 301. So if you're not comfortable, I get it. But it certainly is an intriguing way to go. Probably a better probability than that $5 vertical that is pretty much like spinning the roulette wheel at this point. It could easily be worthless, and there's not much you could do about it. Let's go out here to Andorian. I like that handle. Is that something to do with the new Andor show coming back out? Seems like long straddles are becoming popular again. Am I crazy? Should I be adding them to my trading arsenal? Yeah, you're not crazy, Mr. or Mrs. Andorian. Does seem like we're talking a lot more about long straddles in particular right now. I mean, I used to joke when straddles came up on our network, it was a very rare occurrence, and it only happened a handful of times. March of 2020 comes to mind. In the hot meme stock days of 2021, everybody was on here talking about long straddles because guess what? They paid out. But those are kind of aberrant scenarios where the market was just exploding and it didn't really matter what you did. If you bought vol, you did all right. And certainly if you bought gamma, you did all right at the end of the day. But those are few and far between. But that said, some of our options boot camp shows now, we have Dan coming on there and he's become a lot more, shall we say, straddle heavy. I joke. We just had Brian on Oddities with me last week, Mr. Options Guy. I joke that he should call himself the straddle guy now because he's always on there talking about, I think IWM was his last big straddle, but he loves himself a good straddle out there right now. So you are definitely not crazy, Andorian. I've been noticing that as well. A lot more people are starting to come on and extol the virtues of long straddles. That said, it is not a trading strategy for the faint of heart. Mr. Matt, have you noticed this as well? There's more interest in long straddles right now, and Andorian wants to know, should he be adding them to his trading arsenal, sir?
Yeah, so part of that 180 million pre-canned strategies that we do, we also will identify the best performing backtests in the market environment that we're in right now. And so when I go to that, and that's what I did to get ready for this question when I saw it, is I see some long straddles on there. So that's very interesting. And it's I didn't expect them to be there, but they're showing up on our top backtest, which is quite interesting. And so, yeah, I mean, the straddles are something that pop up a fair amount. And we also test straddles, not just like a 50 delta, but we'll test like a 60-40. And sometimes those are the ones that are doing better. They're slightly longer, but if the market goes down, it goes down a lot quicker. So what you don't want when you're in a straddle is for something to kind of eke up very slowly. But if you have a little bit more delta, like in a 60 call and a 40 delta put, you have some long deltas that will help you as the market goes up. And if the market goes down, you're going to feel a little pain at first, but you're going to get such a vol pop and usually a bigger move that that's the reason I'm guessing that those backtests do better.
Yeah, looks like straddles even making their way into the ORATS backtest machine, Mr. Matt. So there you go. And Dorian, you are clearly not crazy. You have spotted a trend that is starting to infect the options world. Everyone's crazy for a little bit. Now, you got to be selective, obviously. Only certain names are really going to work. If you just go out there buying long straddles willy-nilly, I've said it many times, that is a death by 1,000 cuts. You're going to get theta decayed to death. So just watch out for that. But if you can find some select names, some of the we just talked, I think the last time Matt was on Oddities with us, we talked about those quantum computing straddles. Those were explosive, and they paid explosively, pun intended, out there. So it's got to be a name kind of like that where it's very well suited. But if you can find those, yeah, a straddle is certainly not your worst option. Looks like our chat pricing out that 135 Nvidia as about a calendar right now. Said it's around $1.15 for 1 week. That's probably a little better than just buying the straight vertical and rolling the dice, right? And there's a little bit of a savings on top of that. So kind of interesting stuff. They're also saying that they're looking to add to their Solana holdings here. Yeah, if you've been waiting for a pullback in some of these big crypto names like Solana was 260 less than a month ago. It's hit 130 something, I think, this morning, 134, 133, something like that. So yeah, if you were waiting for a pullback to as you put it in the chat here, Nichols, nibble, then I guess now is not the worst time out there. So you can view it glass half full. You could add to your holdings at over 100 handle discount. Not the worst thing. Man, we did a lot of living here on the advisor's option today. Again, why our folks call it the hidden gem of the network. We talked about earnings vol. We talked about what's going on in the broad market and the vol space right now. We talked about the overall market trends for options. We talked about 24-hour options trading. Is it coming? What do you folks think? Make your voice heard over there at Options. We talked about straddles, talked about calendars and verticals and Nvidia. We talked about Solana. What else could we cram into an hour, listeners? I ask you. I don't think it's possible. We did a lot of living out here today. But before we go, Mr. Matt, if folks want to check out that macro vol article or do some back tests of their own, or maybe talk about you got a new journaling tool over there at ORATS. Give us a little hit on the journaling and then tell folks where they should go if they want to learn more. Sir.
Yeah, our latest tool is a journaling tool that basically saves your trades that you've done and allows you to slice and dice them and see when you've done well, see when you've done poorly, see which strategies do well that you've done and symbols, and it's really nice. Like it's great to be able to go back and see what's going on. It automatically does the exercises and all that, so it's very cool. It's just for beta users in paper trading right now, but we're going to roll it out to our interactive brokers clients this quarter, and it's all going to be fun from there. So that's at orats.com. Support at ORATS. You could sign up for the beta for that, and in our blog is where you can find that article. And the Nasdaq published it. and hopefully the Option Insiders will publish that blog too.
No, we refuse, Matt. We draw the line at that. But that's fascinating stuff. And again, if you want to learn what you're doing wrong, maybe what you're doing right, how things worked, there are worse ways to go about it. Check out that tool. You just keep adding to the arsenal, Mr. Matt. I think, is your goal to make it so that I go to ORATS every day and never leave, sir? Is that the goal?
We want to get you, and then we want it to be like a video game that you never leave.
I keep leveling up. I keep getting a little ding. You have leveled up in options trading over there at ORAT. That's not the worst thing. People do get addicted to that gamification, Mr. Matt. Don't let Otto hear that, because then he'll be off to the races. So check out all this cool stuff we talked about and a whole bunch more. ORATS.com, ORATS.com, the place to go to learn more. You already know where to go to learn about all that options data we were talking about earlier on the volume side, as well as they have great educational content. Head on over to our friends over at the Options Industry Council, optionseducation.org. You can also check out the show they do on my network called The Wide World of Options if you want to get a little bit of a deeper dive into different options topics over there. That's going to do it for us on the Advisors Option today. Also going to do it for us on the network today. But never fear, back again tomorrow, because the producers love you and they hate my voice. We got a triple header coming at you. We're going to have an awesome pro Q&A with our good buddy, Mr. Scott Bauer from Prosper Trading. So start getting those questions in now. You can send them in via the live chat. Members hotline always works as well. That'll get you bumped to the top of the list. Those are usually oversubscribed with questions. So get them in early if you have questions about that Nvidia vertical or anything else like that. Get them in for the pro Q&As. Those are always a good time. Then we got our usual doubleheader on Wednesday. Of course, the Options Bootcamp. I'll give Dan a hard time about straddles, just for you folks. I think we'll be joined by Jamal Chandler from the Tasty Group over there. So that should be a fun time on Options Bootcamp tomorrow. And then, of course, you want to go deep into the underlying. We got the Futures Rundown. Who's going to join me on the Futures Rundown? We got to tune in to find out. And then, of course, doubleheader action again on Thursday. The Flowmaster joins us for a little bit of the option block, as well as This Week in Futures Options. Who's going to join me out there? Got to tune in to find out. Friday Vol Views, and then we're back again one final time for you pro folks to go wild in the world of unusual activity with some options oddities. Should be a good time, so rest up for the rest of the week. Of course, we got Nvidia earnings sprinkled in there, a lot coming up. So stay tuned for a lot of great content this week. And then we'll see you back here throughout the rest of the month until we gather here together another episode of the Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.